Is it better to invest in a house or an apartment? Now, that's an age-old question, but it's not one that's easy to answer. In fact, a few things have happened over the last few years which have caused investors to increasingly shy away from investing in apartments. So today, I'm going to discuss this topic with Brett Warren, National Director of Metropole. And even if you're not considering investing in apartments, I hope you're going to find our general discussion about what makes a good investment property and what to avoid. I hope that's going to help you no matter where you are in your investment journey. So, welcome to today's show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Over the last few years, many Australians have had a shift change to new working and home life. And that was initially prompted by the lockdowns of COVID-19, the pandemic, but now we've got a hybrid model of working from home part of the time for a lot of us. And it wasn't that long ago that many investors lost confidence in apartments. Remember, there was that influx of shoddy high-rise apartment buildings built, particularly in Sydney, some in Melbourne with cladding issues. They were built during that last building boom. And it seems that more investors are now asking, are apartments a good investment in the current market, considering that they're so much cheaper than houses? Well, so to answer that question, I'm going to be joined today by Brett Warren, National Director of Metropole Property Strategists. Hi, Brett.
Hi, Michael. Good to be with you. It's a pretty broad question there. I guess my view is it really depends. It's going to depend on the location of the apartment. It's going to depend if the apartment is a family-friendly or, those high-rise Legoland-style buildings. I guess depending on what neighbourhood it's in, it's going to depend on the size of the apartment. Look, there's just so many different factors. And I guess to explain my view further, let's first look at some of the challenges that the apartment market in Australia is facing and what's driving the change in investor sentiment and I guess what we can expect going forward. And then we can probably look at the most important question of all, which is, should you buy or should you invest in a house or an apartment?
I think that's a really good way of starting because there isn't a simple answer. There isn't a correct answer. And people hate it when we say it depends, especially when the media ring you up and say, where's the next 4 places to invest in or should you buy in a house or apartment? But I guess that's also our strategy, isn't it, Brett, that we don't have a fixed place to invest, type of property to invest in when we recommend things to our clients at Metropole. It really depends on what stage of their journey they're at, what their budget is, what their risk profile is, and what else they got in their portfolio.
Absolutely. We're definitely not a one-size-fits-all and we don't have any stock to sell and we're 100% independent. I think that's very, very important when you're getting that kind of advice. So if you're looking for a superficial answer, you're probably going to be disappointed, aren't you, Michael? Because the devil is in the detail and that's what we want to do with each individual person is drill down. And that's, I guess, what we're going to do with this question today.
Well, actually, it's interesting. A bit of a sidetrack, but only a couple of days ago I was having lunch with somebody reasonably well-known in the property industry, and I won't mention his name, who was telling me about an associate of theirs who was doing really well at the moment because they'd sold out a whole apartment building to their investors. And this gentleman called this associate a buyer's agent, and I said, well, hang on, if they sold a whole apartment building, I don't know if it's good or bad, or I do know which city it was in, but pre-sold them to investors, they're not buyer's agents. What they're doing is, because that particular building couldn't have suited every one of the clients that they'd seen at the seminar that had been held. Let's just be careful and say it may suit some people and not others. But going back to what you initially said, what's the baseline? Where are we coming from? Well, we know that COVID changed a lot of things. So there was a period of time where people didn't want to live in apartments. We were trading place for space. We actually wanted to not necessarily be in the middle of the CBDs. Before COVID, of course, people were trading their backyards for balconies and courtyards, wanting to live close to the CBD. But boy, things were different for a couple of years, particularly in Melbourne, also in Sydney. But now things are moving back again. People are moving back from regional Australia and people are filling up the apartments. Interestingly, I just read this morning, Brett, that 1 in 10 people in Australia are currently here on temporary visas of the whole Australian population. Interestingly, that's students and that's migrants. And so the students are back in real force at the moment. And what they're doing, of course, is they've filled up a lot of those apartments that were left vacant over COVID.
Yeah, look, and you'd probably say the migrants are as well, the overseas people that are coming in. They don't know where to live and what to live in, so they're generally attracted to the CBDs, and obviously that's a change as well. So, look, we are
they've lived in high-rise or high-density urban environments in their hometowns, haven't they? So they're not uncommon. It's not uncommon for them to live that way here.
Yep, 100%. So, look, that's probably the biggest of the headwinds, I guess, is, I've got 3 things here to talk about, Michael, but the first one is the fact that COVID-19 has actually changed what we want out of a home as well, hasn't it? So, as you said before, people don't want to live in the big Legoland kind of towers. They want space, they want an extra room, or they want a balcony or some green space. And so I think the way they're living is the first thing. I noticed around Brisbane, I guess 5-10 years ago when they were putting apartments up, the apartments today have changed significantly. And as you said before, they're kind of focusing on more family-friendly areas and neighbourhoods and type of properties as well.
Yes, definitely. So that, of course, creates demand. I think one other big change that happened over the last little while is lack of confidence. People lost confidence in apartments. Investors, because for a long time, particularly in Melbourne and Sydney, apartments didn't perform as strongly as houses. Capital growth wasn't as much. That was because there was a whole surge of new developments, many of them cookie-cutter type apartment blocks that didn't make good investments, and people bought that. But also just the oversupply meant that even some of the more established medium-density apartments didn't perform as well just because of competition. So on one hand, investors lost confidence. But if you go back the decade before, and I've owned apartments for a long, long time, apartments in general were cheaper than houses in our big capital cities. But in Melbourne and Sydney in particular, they performed with similar capital growth. But on the one hand, investors lost confidence because of lack of capital growth. But the other was those highly publicised Mascot Towers, Opal Towers, the problems with structural defects, fire issues, water issues, and they're still in the news today, Brett.
Yeah, they are. And those areas, the land's so valuable in some of those locations that they have to save on the build cost and probably do things a little bit cheaper and find products that are cheaper, and they're certainly starting to pay the consequences now with those kinds of results.
Well, what that's going to mean is now the next round of buildings that are going to be built more carefully. Building surveyors are being much more careful. There's a lot of news about how the building industry's got to clean up its act with apartment towers, which means the next round of apartments that are going to be built are going to be much, much more expensive. But as we set the scene for, I guess, the baseline to move forward, are apartments or houses better investments? It's also worth recognising that the pipeline for new apartments is very thin. Despite our very large, strong population growth, I read recently the chairman of Mirvac suggested in 2025, so not next year, but the year after, because there's a long time lag for new apartment buildings. There's only going to be 50,000 new apartments being built. That's what's in the pipeline. That's not enough to satisfy the requirement. And interestingly, there's, of course, this new build to rent category of development, which is being incentivised by the government. The government's giving big corporations incentives, tax incentives, to build large blocks where people can have long-term accommodation. I've got no issue with people doing that. That's what you and I do. We build things to keep in the long term and have tenants there for the long term. But I'm not that thrilled with the fact that they're giving tax incentives on top of what you and I get, because how are they giving them? That's you and my tax money going to incentivise big developers who are only going to do it if they make enough profit, Brett.
Well, I think that's the problem at the moment, isn't it? There's no profit in these types of projects, and that's why there's been a significant reduction, and the average is expected to fall by about 39% over the next 3 years because they're just not profitable. So the only ones that are profitable, funnily enough, are the ones that the governments are incentivising and giving tax breaks to make it profitable so that they can actually get these things out of the ground. And obviously that's slowing down in Sydney, Melbourne and Brisbane in particular, but I guess bucking the trend, Michael, are areas like Perth and obviously the Gold Coast, which is a vertical city, and they seem to still be thriving.
They are. The other trend is well, I was going to call them downsizers, but they're really, let's call them right sizes. I think that's a nicer word, where more expensive apartments in the more luxurious suburbs are still doing very nicely because, yes, they cost a lot more, but the downsizers have got the ability to pay for it. They're usually moving out of a home and have no debt against it. So that market's still moving as well. So with that as, I guess, a bit of a baseline, maybe you can go through some of the pros and cons of investing in an apartment. So what are some of the advantages? What should we be considering if you're going to buy an investment apartment?
Yeah, look, let's go through a few of those. So obviously the first one is, in the same location, relatively speaking, apartments are cheaper to buy.
Hey, that's a really good point. In the same location.
Yeah.
You're right.
Yeah. So, but look, looking in the same suburb, the cost of apartments are generally significantly lower than houses in the same area. So it makes it more of an affordable option as an investment, but also even for a first home buyer. So look, I know in the areas I live, Michael, the average house price is around $2 million, but you can still get a unit at $600,000 or $700,000. So, I'm sure that's pretty much comparable around in different areas and different locations. So the first point, I believe, is, I guess, that the distinguishment and being cheaper, it's actually allowing you to get into the right location. And as we all know, 80% of the properties, I guess, performance is generally comes down to the location.
That's right. So you've got to have, I guess, a reasonable amount of land in that location. So you need to have a high land asset ratio. But a lot of apartments are being built in the inner and middle ring suburbs of our capital city. So those locations are good. Now, I know some people are going to say, oh, yeah, but the body corporate fees, the owner's corporation fees. But interestingly, if you were to own a house, you'd have to pay insurance, and you'd have to pay for maintenance and repairs. And so if you buy this sort of apartment that doesn't have swimming pools and lots of expenses, then it's not a big issue, the owner's corporation fees. Now, of course, if you're on the ground floor and you're paying for all the lifts and you don't get the benefit of that, well, that's a little bit of a waste. They're also, for some people, I guess they're less maintenance. You don't have gardens. The common areas taken care of by the strata management company. And for a lot of people, security is an important factor, isn't it?
It is, especially for people, single people and maybe living on their own, especially females and elderly people. You do enjoy the benefits of having that security, and quite often they're behind a door. They've got to be buzzed in and things like that as well. So they do offer good security in places that may concern walking home at night or parking their car on the road or street or things like that, because quite often the garages are also quite secure.
Sure. So as we go through the benefits of apartments, we're going to talk about the negative side as well. We said they're in good locations. As an investor, you don't invest for yield, but cash flow is important. It keeps you in the game. So in general, the yields are higher for apartments. And with the real shortage of accommodation at the moment, in Sydney in particular, the rent for apartments and the rent for houses is, well, again, not necessarily in the right suburb, but the median rent for apartments and median rent for houses in Sydney is getting to be very similar.
It has, and that's certainly changed from, I guess, 2 or 3 years ago, when obviously those people coming in the country weren't renting to go to the unit. So we had that real lack of demand, and that's really certainly turned around, because, as you said before, all those people coming in now are really, boosting rents, and rents are skyrocketing in those locations. So that's absolutely true.
And I guess another advantage of investing in apartments is, if you're taking a medium to long-term view, as we said a moment ago, the next round of apartments that are going to be built are going to have to be much, much more expensive. The market's not paying for it at the moment, but the building cost of high-rise apartments is apparently 50% more than it was pre-COVID. And Harry Trugaboff, the owner of Meriton, said that for all new apartments he has to bring out of the ground, he's going to have to sell them for close to 30% more than what the current market is going to bear. So that's going to push up the value of apartments, established apartments, just the fact that new ones are going to cost that much more. And then there's also the government's understanding that more and more of us are going to have to live in medium and high-rise dwellings. That's just the way our cities are going to grow. For the last century, it's really been urban sprawl getting further and further out. Now, with the business plan of Australia to have 40 million people by the middle of the middle of the century, we're just going to have to build a lot more accommodation. It's suggested we're going to have to build one new dwelling for every 3 dwellings currently existing, and most of those are going to be medium density and high density dwellings. So it's going to become a more preferred style of accommodation. The thing is, you're going to have to build the right sort of apartments and in the right spot, Brett.
Yeah, definitely. And look, those demographics as well, Mike. I mean, those people, the next generation, they don't want to live further and further out and keep moving further out. They want to live where the lifestyle precincts are and the coffee shops and the restaurants with high walkability and good public transport to get around. So, yeah, I can definitely see that trend changing.
Okay, so we've said some of the good things about apartments, but there's also some reasons that some things you've got to be aware of. So what would you be suggesting if somebody said, well, what's the downside of investing in apartments?
Yeah, look, with the good, there is the bad. And I guess, having to abide by a strata or body corporate rules sometimes can be challenging. Obviously, if you own your own house, you've kind of got that freedom to make the choices and do what you want to do and paint the walls how you want to paint them and externally as well. But it's a bit different with the strata. You've got to get those, I guess the rules and the regulations and abide by those. And obviously,
now, I remember a couple of years ago, we'd bought an apartment for a client, and it was one that we renovated so that they got the upside straight away and put air conditioning in. The owner's corporation gave him a real hard time. Often you'd put the air conditioning condenser on the balcony. They didn't want that because it was visible to others and it would look ugly in their minds. And so we were wanting to put it on a blank wall, the wall at the back that no one could see. Even then they gave hard times. I'm not suggesting it's a reason not to invest, but it's something, a really good point that you brought up, that it's a democracy. Everyone has a vote, but your vote doesn't always count.
Yeah, that's very true. And I guess the other thing which is probably changing a little bit, Michael, is also the rules around pets and things as well. So that's probably becoming a little bit more favourable, but it's still something you've got to, I guess, manage. The other thing which we've kind of already spoken a little bit about is apartments generally have more fees. And, we spoke a little bit about the body corporate fees and things like that as well. Sometimes there's special levies as well. And that can be a little bit overwhelming for investors, particularly, if I was investing in a place with a pool and a gym and a spa and all this fancy stuff and I never got to use it, I'd be pretty disappointed to be paying $10,000 a year body corporate. So that is, a manageable thing, but it's certainly a detraction that, you don't want to get out of hand, do you?
Well, that's one of the reasons that we don't recommend investing in those sort of buildings. Particularly, we've never ever suggested off-the-plan apartments. We've never suggested new, because there's just too many fees involved, the developer's margin, the marketer's cost, and often there's these quite expensive owners' corporation fees as well. Now, what happens is some developers try and sweeten the deal by guaranteeing the rents or telling you how much depreciation you've got. That's not a reason to buy into those new complexes, is it, Brett?
No, definitely not. Obviously, apartments are smaller, and I guess we favour more spacious apartments, and where we're not living on top of each other and things like that as well. So I guess a good positive to that is, Michael, there's less cleaning to do, but there's obviously less space. And again with apartments, it's not as private as houses. You've got common walls and you share front areas and doors and common areas as well. So it's probably not as private as living in a house, and that probably rounds out most of the negatives about with investing and buying an apartment.
Well, I guess the initial question that was posed was, should you invest in an apartment or a house? So let's do the same with houses. Let's go through the pros and cons of using houses as an investment, Brett.
Yeah, well, look, obviously the most obvious one, I think, is obviously houses have more space. And I think the big argument people make is, why would I buy an apartment? There's no land. Well, there is some kind of land intrinsic value, which we can probably get into at some stage. But it's quite clear that in the same location, a house is going to have more land, and you're going to have a bigger parcel of land. You're going to have more options. You've got your own garden and courtyard and possibly an entertainment area, and you can add your own touches to those types of things as well.
Yeah. You said it a moment ago, it depends where the house is, because it's the underlying land value. And to be blunt, I'd rather have an eighth of a block of land in Bondi in Sydney overlooking the water than in Alice Springs or Darwin, and no disrespect to the people who live there.
Yeah, that's right. And look, generally speaking, again, as long as we're in the same area and location, houses have generally outperformed units as well. So houses do increase in value slightly more, and that's certainly been the case over the last decade The median house price is now probably about 1.6 times the median apartment price in Sydney and Brisbane, and over 1.9 times in Melbourne. Obviously, Melbourne's had a few challenges there. So this is because obviously houses have risen strongly over that time, whereas apartments have probably barely changed, probably in the last 5 years, certainly before COVID. And you're getting a higher return on value means larger profit and larger savings as well.
And even at the beginning of this new cycle that we've entered, apartments haven't grown as much as houses. Now, that's not a reason not to invest in the right apartment, because I believe there's more upside, because as affordability becomes more of an issue for people are going to have to either decide, well, I can't live in that suburb, I'm going to have to go to the next suburb or 2 or 3 suburbs out, or I'm going to have to live in different accommodation in that suburb, either a townhouse or an apartment. Now, townhouses are somewhere in the middle of this. A good townhouse has got a much larger land component and usually performs a bit like a house. I think houses also give you a bit more flexibility. You said a moment ago, Brett, that owners' corporation and neighbours, and you want to have pets, or you want to renovate. So the opposite of an apartment, you got more privacy and more flexibility. And again, in the right location, you've got land. And I think the other thing in the right location is you've got upside potential. In an apartment, you can renovate it, but there's only so much you can do. You can't usually do structural renovations because you can't pull out the wall because it's supporting the apartment above you or below you. On the other hand, with a house, you've got the ability to renovate, to do structural renovations, to add more, to pull it down and put a development on it. So over the medium term, the value add potential is there too. And that's one of the other big advantages that I see in houses. But what are the disadvantages of housing as an investment?
Yeah, well, look, well said. And I think obviously the first thing we elaborated on earlier was that houses do cost more. In the same location, houses are always more expensive than, I guess, those comparable apartments. So this means you're going to need a bigger deposit. You're going to need bigger borrowing capacity to buy a home loan with a house, I guess.
Yeah, sure.
I guess the next thing is that houses do require more maintenance. So, owning a house means you're responsible for all the maintenance, not just things internally. And you're looking at, obviously, your backyard, you're looking at your roof, you're looking at everything else to maintain. And you've got to look at bins and repairs. And obviously the owner has to arrange all of this themselves, whereas in an apartment, it generally, most of it kind of gets taken together for you by the strata company that have organised it. So that's definitely something that's an advantage of living in an apartment. And finally, obviously, it costs a lot more to run a house because you've got more space and more land. You're going to have high utility bills. As an investor, there may be some land tax obligations as well. And then there's obviously the cost of buying any extra furnishings or appliances and things like that as well.
Right. So again, there's advantages and disadvantages, and clearly one of the advantages are that houses in general have outperformed with regard to capital growth. But in my mind, comparing apartments and houses is unfair, because if your budget doesn't allow you to buy a house or a townhouse in an A-grade location, and that's of course first prize, then I'd be buying an apartment, a family-friendly apartment in an investment-grade location, because the location, as we keep saying, is going to do 80% of the heavy lifting. I'd rather own an apartment in a top street in a blue-chip suburb than a house in an outer ring location, much, much further away from the CBD, where the tenants are going to be living month to month and day to day sometimes, and not being able to pay more rent over time. And the surrounding owner-occupiers are not going to be able to improve and gentrify the area either. I, again, believe location is important. Moving forward, as we said a moment ago, I think the outlook for apartments and apartment growth is going to be strong, because the government and local councils are going to keep encouraging medium and high density development, but we're not going to be building enough for all the people coming in. So that's going to push up the value of established properties as well. And we've used the word family-friendly apartments a couple of times. I think it's important to find an apartment that has a good layout, that has got usable size rooms, that has got lots of light to it, that's got a balcony. We particularly like it if they have a little courtyard at the back as well. In Melbourne, in particular, there are things we call villa units that were built in the 60s and 70s, in particular for older people, for retirees in those days. But today, villa units are the domain of many first home buyers and young families, because they're sort of apartments, but the size of them may be a little bit bigger. I know you've got villa units in your investment portfolio, and I do as well, but they've got a front yard sometimes, but they've got a bit of a backyard. So they're a good blend because they're in the sort of location that has over the time improved and gentrified.
Yeah, they're just like a small house, really, aren't they? That's a good point.
So again, I think it's important to remember, go back to the basics. What is it that improves the value of your property? What pushes it up in value? And that's the location and the land value in the location. Because in the future, your rent, your income that you want to live off is going to be dependent on your tenant's ability to keep paying higher rent. And in some locations, people are renting not because they're poor, but they're renting because of lifestyle choices, how they want to live. They're between jobs. They maybe moved to a new state. There may be new migrants from overseas. They may have just got divorced. So a lot of people live in apartments. Now, I know, unfortunately, my neighbour next door who lived in a very luxurious house recently got divorced or separated and moved into an apartment, and he's quite an affluent person. So it's not just poor people who live in apartments, but again, look at the land component of it. And the easy way to do this is actually looking at the land value and dividing it by the number of apartments in the complex. With those new complexes, you've got to divide by 200 or something. I can't do sums like that in my head, but I can divide the land value by 7 or 8 or 10. And so the land to site ratio could still be quite high.
Yeah, look, this is a good conversation, Michael, because I had a client that I purchased for in Brisbane. It was actually an amazing unit on the river overlooking the Story Bridge, and we ended up paying about $650, I think it was, $655 for this particular property. But it couldn't be built out. It had a walkway to the river walk in New Farm. There was only 10 in the complex. The land value at the time, I think, was around $7 or $8 million. As you said, divided between 10, but what actually happened, Michael, 3 years later is a developer came knocking on the door. And remember, we paid $650 for that. Everyone walked away with $1.1 million.
Amazing, yeah.
They're now selling those apartments because they're so unique and scarce. They're now selling those apartments for 1.4 plus as an entry level. So it is the land, and it's hard for people to understand sometimes that that units do actually have an intrinsic land value. And that's exactly how we calculate it. It's obviously a lot easier for a house because you've got your rates notice and you generally get an idea of what that's going to be worth. But at the end of the day, you want to buy something with as much land value as possible, because at the end of the day, that's what's going to go up in value. And again, everything else is really going backwards or depreciating, isn't it?
That's true. So, well, I guess while it is depreciating, the cost of replacement is going up. So for some people, an apartment will be a right investment, and it depends, again, as we said a moment ago, upon your budget. So I guess another question people would be asking is, well, should I buy a new apartment? This clean, it's a clean slate, low maintenance. You walk in and it looks pretty. So some people are buying new. A few are buying off the plan. Very few are buying off the plan at the moment, Brett. I think most people realise that that has never worked, and even less at the moment, because the certainty of completion of construction is a real issue. But these new properties, I guess they have a superficial appeal, but it shouldn't be that way. It should be primarily an investment, a financial decision. So there's a few misconceptions about new properties. Some people say new properties are easier to rent, and that's not too unusual to think that. But at the moment, we've got really low vacancy rates and anything rents at the moment. And if you're buying into a new complex, it's likely that all the investors that are all the other owners, I should say, are going to be investors as well. And that's one of the problems with all those complexes that were built during the last building boom, that when you have an owners corporation meeting with investors rather than owner occupiers, they don't want to spend money. And a large portion of them were overseas. Remember, the last building boom was fueled by overseas investors because they could only buy new or off the plan. They couldn't buy established properties. So to have an owners' corporation meeting with people who don't really have the interest in your building creates a lot of issues as well. So I'd be very cautious about that. I think another misconception is that there are a lot of tax benefits for new properties, and that is true. You get better depreciation allowances for new properties, but that's usually made up for by, let's call it slower capital growth, because you usually overpay because you always pay a premium because there's too many fingers in the pie when you buy a new property. Somebody's got to pay for those display suites and the marketing and the seminars that they put on. So it's not only new properties that are eligible for depreciation. And the big one, of course, is people say, oh, new properties, less maintenance. Couldn't be further from the truth, could it, Brett?
Well, not the new apartments in Sydney and Melbourne sometimes, because I think quite often we've got the peeling paint. I know the balconies have been leaking, and obviously some of the building insurance policies only cover so much for so long. So, I think every major apartment complex has had some water leaking issues as well. And
you'd think you'd be able to get it right by now, but they can't, can they?
No, they can't, and they don't seem to be able to do it. So it does pay to look at the bigger picture, because if you're buying an established property with the intention of adding value through renovations, which is a great way to add value, you can always address those minor maintenance issues along the way.
Sure. So I think, unfortunately, some of those new apartment buildings built 5, 8, 10 years ago, that last building boom, are going to be the slums of the future because of all the issues there. I know there's a number of towers in Sydney where you just can't sell a property. I think one of the other misconceptions is new properties don't cost much more than established ones. That's not true. There actually is a bit of a gap between the price of new and established properties. But that's in general also because new properties, the ones that have been built recently, are much smaller. So if you compare a two-bedroom apartment to a two-bedroom apartment, but one's actually got 25% more space, more square metres, then if you do it per square metre, new properties usually cost considerably more. So let's get back to the original question. Should you buy an apartment? Does an apartment or a house make a better investment? Well, remember, there's not one Melbourne market, Sydney market, Brisbane market. Similarly, there's not one Melbourne or Sydney or Brisbane apartment market. And you should also consider, if you can't afford a house, townhouses or villa units. I think in general, most investors would be better off buying existing properties with some character. And as you said just a moment ago, renovating them. And you don't have to do the renovation straight away. Use your budget to buy the best property in the best location you can. And then down the track, you could renovate it. And that will give you higher yields. It'll also give you some efficiency. And it's actually a good time in the cycle to start getting into apartments because they really haven't picked up as much as houses yet. But we're only just before we pressed the record button, Brett talked about how inquiries from investors has picked up considerably. I think most people have realised now it's finally happening. Even though the market turned in January this year, February in some states, the world is starting to realise that they've missed the bottom and it's time to get in.
Well, particularly a little bit more certainty around inflation. That's certainly come back faster than expectation, and obviously with a no rise in interest rates for a while yet. I think we're probably towards the top of that cycle as well. And whatever your thoughts are there, I think most economists agree that at some stage next year, probably around mid next year, that interest rates will actually come back. And I think that is what everyone's kind of waiting for a sign. Maybe that's the sign they were waiting for.
Well, a lot of people think Metropole's a buyer's agent, but we're much, much more than buyer's agents. We start off by helping our clients plan to become the investors they plan to become, plan to outperform the averages by putting a strategic plan together for them. And whether it's a house, a townhouse, an apartment, Melbourne, Sydney, Brisbane, we haven't got any fixed ideas, commercial property, whatever. Really, we've got to understand where you are in your personal game and then what would suit you to get you where you want to get to. So while many people, Brett, actually come to us, I only had this conversation with one of our property strategists a couple of minutes before we got on the line now too. People often say, oh, look, I want $100,000, I want $200,000 income, and that's fine, but they don't think about all the other stuff they want at the end in their golden years about their house, about their super, about what other portfolio or other assets they got in their portfolio, be it shares or cash flow assets. So we take a much more holistic approach. And if anybody just says property only or shares only, I'd be running away. So if you're keen to take advantage of what's happening over this next year, over this new property cycle, why not have a chat with the team at Metropole? Brett, I'd actually like to finish off this chat with a little guarantee. Could I do that?
Of course. It's your podcast, Michael.
Now, I can't guarantee that houses are going to do better than apartments or apartments are going to do better than houses. I actually can't guarantee if interest rates are going to creep up again a little bit or inflation is going to get under control. I can't really guarantee when investors are going to stop. So when interest rates are going to go down. But I can guarantee that in 12 months' time, we're going to be in October 2024. That's for certain. I can also guarantee that there'll be some people between now and then, Brett, who are going to sell up. They're worried, they're nervous, they're upset, they're worried about the fiscal cliff. Now, some people are going to have to because of their financial circumstances, but I think others are going to get out just because they're scared and they're nervous. I think I can also guarantee that in 12 months' time, they're going to think, oops, shouldn't have done that. I think I can also guarantee there's going to be a whole group of people listening to this who are just going to wait. They're going to sit, they're going to listen to the podcast, going to read the blogs, they're going to come to our webinars, and they're just going to wait and see. And 12 months' time is going to be gone, and the market will have moved considerably. And I can also guarantee there's a small group of people who are actually going to take strategic action. They're going to do something about it, set aside the time to build a plan for themselves and actually take control of their future and their destiny. So if you're listening to this, which of those three are you going to be in? When we chat in 12 months' time, Brett, pull me up on this and let's see if my guarantee was right.
We will see. We certainly will. And look, Michael, to add to that, today may not be the right time to buy, but I think it is the right time to actually get your ducks in a row for when you are ready, and you can take advantage of that rather than working in reverse, if that makes sense.
No, I think that's really right. That's one of the beauties that if people come and see us at Metropole, we actually don't sell them anything other than advice. There's a large group of people who we can't work with and can't help, and others, the right advice is don't do anything. Sometimes the right thing to do is nothing. So, Brett, thanks a lot. Have we decided what's a better investment? Maybe it goes back to the first words you said. It depends.
It depends. Definitely location and land, though. I think if you can start your answer with that or your question with that, I think you'll be in the right place.
Fantastic. Catch up with you again soon, Brett. Thank you.
Thanks again.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to explain to you that how you do anything is how you do everything. Now, I remember when I heard this saying for the first time from one of my mentors many, many years ago, it took me a while to absorb the meaning of these words. But it was important to do so because in my mind, they're very, very true. How you do anything is how you do everything. How you handle and manage any situation, challenge or experience in your life is how you probably handle all of them. Now, when I first heard this, it took me a bit of time to reflect on it because it speaks fully to how I live my life today. But it wasn't always that way. As I took time to look back on my life, I realised that this statement was true even then, though I didn't fully realise its implications. I may not have understood then, but I understand now that each and every action I take, every word I speak, every decision I make, contributes to the creation of the life I choose to live. Because how you do anything is how you do everything. It's important to be honest about how you do anything. For example, how do you perform at work? For example, how are your friendships? What are they like? Or another way of thinking about it is, how do you approach a challenge? I mean, if you're late to deadlines at work and don't pay close attention to detail, then chances are these characteristics can be seen in your personal life and in your relationships as well. If you often find you're having conflict with friends and family members, you're probably going to find there's conflict in other areas of your life too. So let me ask you this. Do you fully understand how you do anything? And if you aren't fully satisfied with your anything, perhaps now's the time to break old patterns and set new standards. Well, thanks for spending the last little while with me, and I hope you got some benefit from this show. If you did, and you know somebody else who'd also benefit, please tell them about the Michael Yardney podcast. There's a share button on every podcast app. On Apple Podcasts, there's 3 little buttons down the bottom. Press it and share it, or just tell them about the Michael Yardney podcast. I hope you're going to be doing them a favour, and you'll definitely be doing me a favour and helping me in my quest to make as many people as possible financially literate. Now, there's ways of catching up with me between these shows. Just look for Michael Yardney on social media, or why not join my private Facebook group? Go to Facebook and look for the Property Update Facebook group. And I have a way of saying thank you to you for subscribing to this podcast. Go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where you can get a bunch of ebooks and reports. My way of saying thank you. And when you've got time, why not listen to some of the old podcasts? There's individual lessons in each of those that I think would be helpful for you. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?